Dukascopy remains at the forefront of Forex trading analysis, bringing you all the information that you need to know to get the very best out of the markets. Joining me in the studio today to discuss market outlooks is Dukascopy's own Marc Spaelti. Marc, thank you very much for joining us in the studio today. If we take a look first of all at the euro dollar, we can see here that the euro has tumbled and surged unpredictably this week, echoing continuing tensions in the eurozone. We're currently experiencing a bearish euro dollar sentiment with low volatility expectations, putting the dollar as a safe haven currency at risk. What are your predictions for this currency pair?
Well, we've just got the results last night from the European finance ministers' meeting that seemed to have finally found a solution for Greece, basically cutting about 240 billion of debt for them. In preparation to that, we see that the euro has actually been rising yesterday, but now as the news has hit the market, it's come out and the euro is taking a sharp fall this morning. It's down about 1 cent this morning, and the outlook is probably gonna be one that, okay, we seem to get this story a little bit behind us. We can focus again on other events besides Greece, and that outlook is probably gonna be dollar favorable in the next months.
FX options traders are increasingly betting on and hedging against the euro weakening further. Do you think that that's a safe bet?
It seems to be the bet of the year. I mean, so far we've seen a lot of people going out there and buying dollar calls or euro puts to protect that side, or to take a directional play for the year. With that, volatilities have probably increased a bit too much now, and it may not be the best time to put on more of those options.
If we move on now to the euro-British pound, we can see here that the British pound has climbed as risk appetite has increased, with public borrowing in the UK expected to contract and the government's balance sheets looking a little bit more healthy now, well, comparatively to the euro. What do you think can be our predictions for this pair? Well,
with the pressure off from Greece for now, the euro is probably less prone to further weakness. Nevertheless, as you say, as you rightfully point out, there are some encouraging signs out of the UK, and I think that the euro pound will at least either stabilize or be slightly favorable to the pound.
Now we move on to your favourite, the euro-Swiss franc, and we can see here that the Swiss franc continues to trade sideways. We ask this question of a lot of our guests here, but what's your opinion on the SNB's continued defensiveness towards the 120 rate floor? Is this the right move to make, or is it just an attempt to regain market credibility following a controversial January?
I believe it's both of that. It is, first of all, they want to send out a signal of continuity, stabilizing euro-Swiss at 120. It is very important that this floor holds, especially after the resignation of the Swiss National Bank's president that could have added some volatility to the market. Well, it did not do so. The Swiss National Bank did not have to stand away or aside. It maintains its politics, and I think 120 will hold going forward. Yeah.
What future, therefore, do you predict for the Swiss franc, or do you think we're going to have to wait for confirmation of the next SNB president to be sure of this?
I think for now it's the status quo. The 120 level is all important, it's got to hold. As time goes by, I would renew my previous call that euro-Swiss is eventually going to rise. And I'm very hopeful that we will see some move towards 125 maybe over the next few weeks. Once again, the Greek story has been pressuring on the euro. We can put this aside, hopefully, and that should help out the Swiss National Bank in supporting the euro.
Do you think that a slightly more positive future now for the euro, now decisions have finally been made, how do you think that's going to reflect on the Swiss economy? Because we had heard rumours of a potential Swiss recession.
Well, the Swiss economy has been amazingly resilient. We had some recent news from, okay, those were big international companies that are not focused on domestic markets, all announcing very, very good year results. But also if we turn to the smaller enterprises in Switzerland, they seem to have fared quite well, being able to increase efficiency and surviving, not having to lay off too many people, and therefore I'm quite looking forward to, quite optimistic for the rest of the year actually.
Let's take a look at the dollar yen. Now this has experienced a big move which traders have attributed to a change in risk appetite. We're hearing a lot at the moment about risk appetites, particularly a renewed optimism. Do you think that this is perhaps jumping the gun slightly?
It's hard to tell. I have the feeling that there were a number of people, investors, positioning themselves for this dollar yen up movement that we are seeing over the last few weeks. Therefore, I don't think that there's all that many people that have to add further positioning, but that those yen short positions already exist today. The question now is how are Japanese exporters going to deal with them? They are, of course, happy that they're going to be able to do their hedges at 80 and not at 75. Depending on how their year is going, they may actually be able to delay further hedging to later part of the year, allowing the dollar yen to actually go even higher from here. So I'm quite positive on the dollar this year for probably all the way until November.
Lastly, if we take a look at the Australian dollar to the US dollar, now a previous interviewee said that he believed the Australian dollar to be the most overvalued currency in the world. This seems like a grand statement. What are your views on that?
Well, the Aussie dollar is very sensitive to any movements in commodities and therefore economic development in the world. At the moment, it seems like Europe and the US is not faring so well. China may be sucked into a recession as well. So this would obviously put demand for commodities under pressure and harm the Australian dollar in the long run. So your previous interview may have a very good point.
We mentioned earlier about risk appetite, and the Australian dollar seems to have got a good balance between risk and reward. With that in mind, what are your predictions for this pair?
Well, I will simply renew my call for a stronger US dollar, where I think the Australian dollar will not escape that route. Therefore, Australian dollar weaker, dollar higher. Question is this going to be, as your previous interviewee thinks, that if it's overvalued, it should go more than the rest? Well, if we're looking at euro dollar, which could potentially move 12 to 15%, we could see Australian dollar move 15 to 20%, therefore down to about 85 cents.
Marc, thank you very much. That's all we've got time for today. However, please do check out the Dukascopy website for all of your hourly trading updates. For now though, goodbye.